Ladies and gentlemen, good evening. Thank you for tuning in. This is Christopher Aaron. It is the 4th of October, 2017. This is the iGold Advisor channel, and we are going to be focusing on one of the critical technical signals that has just registered over the last week. I think this really bears your monitoring. We have only seen this in the gold market one other time, and I'm going to bring that example up. And what is that we're talking about? Record high gold volume. What does this mean? Let's get right into it. We will take it from the top, looking at the short-term action to start with here on the spot price of gold. We are seeing some attempts to stabilize here. I will tell you, this is, yes, okay, it's a little bit disappointing to see a reversal once again at that 8 a.m. time, just as it looks as if gold is starting to take off. But I have to say, backing this out a little bit further, if this is as low as they could get the price of gold on this correction, right here in the upper 1260s, things are looking very good. This would be sort of a mid-range of the possibilities of corrections that I was looking at for this retracement, and we will be looking at this forming a very important low. So if this upper 1260s can hold here, this is going to be key for the next year, year and a half. Let's watch this very carefully. Looking at silver, is there anything we can notice different here about silver versus gold? We had one of those short-term flush of stops that happened here in the overnight hours just before midnight 2 nights ago. So when you see that, and then we see some stability coming into the market the next day, that's a pretty good sign. This could have been the bottom for the silver correction. These short-term flushes of stops tend to be the potential for that kind of thing. Of course, a reversal today along with gold, but I'll say once again, silver, I expect to lag gold over the intermediate term, at least over the next year or so. And I'm looking at gold as being in the leadership position, silver to follow, to lag for the short run, and then we'll see what happens when silver gets ready to challenge some of its former high levels. Let's talk about this. Record high gold volume. As of the end of the quarter, the third quarter that just ended on September 30th, we're talking the end of last week on Friday. What am I talking about here? First of all, what is volume? What does that mean? It's shown here down at the bottom. We're looking at the gold chart from 2010 through the present. What is volume? If you're not familiar with that term, volume is the number of contracts that were traded in each day, week, month. In this case, we're talking about quarter, 3 months. So the number of contracts that were traded in the quarter. We're talking bought and sold from one party to another. Now, we are talking paper gold, yes, but I will tell you this. For those who dismiss the action in the paper gold, I think after you watch this, you will have a different opinion, because you'll see the last time that we've seen this signal and the relevance that it had. The bottom line is, if you go to buy gold bullion and coins or bars from the mint or from a dealer or what have you, that dealer has to put in an order here on the COMEX, on the paper gold COMEX. They have to stand for the delivery. But that order shows here. So this includes physical deliveries in the COMEX. Just keep that in mind. So what is the point of this? Here's where I want to draw your attention. 2017. Record high volume coming into the COMEX in the last 3 quarters. What was the previous record high? It was here in the third quarter of 2011. Which corresponded with the all-time high for gold, which still stands to this day, $1,923 per ounce. Now, when you go up here from the third quarter, It doesn't show this as the high because we're looking at quarterly closing prices here. So the quarterly closing price was a year later at 1775, but the all-time high for the day was here in the all-time high previously for volume. So what is happening now? Fast forward 6 years later, gold has, we can see this very clearly, has eclipsed the former all-time high for volume, for the number of contracts that are trading in the quarter. And it's eclipsed that, mind you, not just this quarter, but actually the last 2 quarters, just barely. We can see we've drawn a straight line here. The last 2 quarters in 2017 have broken the all-time high, but this one broke it by such a incredible margin, the difference being 3.5 million contracts more than the previous all-time high. Okay, you say, what is the significance? Who cares about volume? Look, prices are still below where they were in 2013. We're talking about gold prices on the spot market that are still below 1,300. We had gold prices in this region in 2013. 5 years ago, prices were the same, but we are seeing record high volume. So what does this mean? So volume, there is increased interest coming into the gold market here after 5 years of basically flat prices. Yes, there were ups and downs, and there was this final washout in 2015, but we're talking as a net sum, basically flat prices here, and we're seeing record high volume. The best way to show you the relevance of this type of signal is by looking at an example from history. Let's go and look at the gold market once again from 1982 through 2004. Now, what do we have here as a net sum? Once again, basically flat prices, okay? We're talking through the mid 200s through the mid 400s. It's a different price range, but as a net sum, you're talking basically flat prices, a couple of swings up in here, a final washout that happened in the late 90s, early 2000s, corresponding with the peak in the NASDAQ bubble, the dot-com bubble. I think it's very interesting that we're also seeing this final washout here corresponding with what looks to be getting close to a peak once again in some other technology areas. Perhaps cryptocurrencies, or perhaps some of the high-flying technology stocks that we see that have gone up for now 9 years in a row. And we see gold bottoming once again at the same time. Anyway, back to the point here from history. The previous high in the COMEX volume for gold was right here in 1982. The price of gold as a net sum did not change for over 20 years, getting into 2004, 2003, beginning of 2004. Volume also never eclipsed this peak from 1982 until when something started to happen here, and you can see a slow and steady uptick here. There were a few spikes in volume going back in the 80s and mid-90s, but you see a steady increase, and finally a clear breakout, a new break to all-time highs here in the volume, eclipsing the previous high from over 20 years prior. Mind you, as prices are flat. So anyone just looking at the price would not see this, but if you're looking at the volume here coming down below, you're saying, what is happening here? Why is there more interest coming into gold, more buying and selling, even though prices have not changed? The answer is because the market is giving you a hint. It's giving you a signal that something in the later stage of this basing process is getting ready to change. When you see record high volume at the end of a period of flat prices, A big move is getting ready. So we will back this out. The previous high volume that we were just looking at from 1982 was here. Here were the 20 years of flat prices. Here was the new break in volume in 2004. And the net result, about 1 year later, 1 year after we saw the record high, the new record high volume spike, prices began basically a 7-year sustained advance, reaching fourfold from the previous highs that we're talking about here in this 20-year consolidation. So it is very important to pay attention to volume. Let's bring it back to the present here, especially when we are talking about this divergence. You've got flat prices here for the last 5 years, slightly below 2013 levels still, yet volume is picking up, and not only that, clearly breaking out. Something is happening here in the gold market, ladies and gentlemen, and this is happening at such a perfect time because I get a vantage point here that I try to share with you sometimes based on looking at statistics of articles, statistics of viewership and over at Gold Eagle and whatnot, and the types of messages that I get. And I can tell you the sentiment now is very poor in the precious metals market. I would say aside from the real diehard long-term investors who are going to be in it no matter what, the sentiment is pretty poor. There's this feeling like, this thing's never going to do anything. It's just, every time it tries to take off, it just gets smashed back down. And I see that. And this is the best setup you could ask for. So does this mean that prices are going to skyrocket tomorrow or that they're going to $10,000 an ounce in 2018, as some of the extremist crowd may say? No, I don't think so. That is not in my planning at all. But I think we are getting exceptionally close to this basing period here resolving. We have seen 3 important signals, technical signals. We've talked about these if you've been following this channel. We've seen these sequential signals over the last year. What have we seen? We've seen gold first. This was a year ago, if you go back to the video. Gold breaking out versus the CRB commodity index. We saw that. I said that was a forward-looking indicator. Second thing we've seen, gold breaking its long-term downtrend. Not shown on this chart. Go back a few videos. We're talking about that. We're now seeing a third leading indicator here, record high volume. Something is setting up. Now, this is going to get a lot more challenging when we start to see the actual breakout from this base. I was pounding the table back at the end of 2015. I didn't have it to the exact date, but I started to produce this channel back in August, September of 2015, which was 3 months before the exact low. And there's a reason that I did that. It was not random. It was because I was looking at certain technical patterns that were telling me this market has a very high probability. That's all we can ever discuss is probabilities. I was saying there's a high probability, and most people were not really wanting to hear it back then because they had become so conditioned to prices just going lower and lower and lower. And then what do we have? Boom, this big rise in the beginning part of 2016. So I'm trying to sort of come back here and say, I don't want to have that scenario happen again. It was very difficult from my vantage point to have to work with people coming into this market in the second quarter of 2016 because we had this incredible surge here starting. What I'm saying is the technical signals are aligning again, and this move that I'm projecting in 2018, it could be starting any time now, and this is going to be a fairly powerful move. Does this mean that prices can't go lower in the short run? Of course they can. But look, we have some really good signals here. I don't like to chase markets higher. We are fully invested here for the premium service. We've got our portfolio of miners. They are set. We are ready to ride this thing when it gets ready to move, which I anticipate is going to happen at any point in the next several days throughout the end of this year. The premium service that I do put out comes with the exact buy and sell signals that we're using here, all of the research for the individual miners, as well as focusing on physical gold and silver and the broad GDX. And we look at everything else that's impacting the precious metals every week too, including the US dollar, the commodity complex, etc., etc. You can find more about that on the website if you're interested. I also work with individuals. If this is not, if you're not interested in the miners, or you're not trading frequently, I completely understand that. I also stack the physical metal. If you're new to the precious metals, I do work with individuals. If you would like to speak with someone, I come from this market from looking to help individuals. The only thing that I sell is my knowledge. I do not sell the products. I'm not trying to make you buy things that you can't afford just to line the pockets of a dealership or something like that. So you can find more if you'd like to speak one-on-one, or by email. We can do that. It's on the website as well. Thank you for tuning in. Do not ignore these leading signals. We see three really important ones setting up here over the last year. The basing process is 5 years and running. It's not going to base forever.